The Swiss banking giant, Credit Suisse, is in the midst of a major crisis. How did a bank with such a long and successful history find itself in this difficult position? What caused this sudden downturn in the bank's fortunes? In today's video, we will look into what went wrong and how they can get back on track. Hello, and welcome to Coin Engine. Before we begin, please subscribe to the channel and click the notification bell to receive more amazing content. Now, let's get started with the video. The failure of SVB triggers a new Credit Suisse crisis. As you may already know, the recent failures of SVB and Signature Bank shook the financial world. These were two of the biggest bank failures in US history, and they brought back scary memories of Lehman Brothers, whose failure helped start the 2008 financial crisis. Those contagion fears have spread outside of the United States, and Credit Suisse is now at the forefront of events in Europe. It has become the first major global bank since the last financial crash to get an emergency lifeline. The bank is the second largest lender in Switzerland and one of the 20 largest in Europe. In the past few years, it has been involved in a number of scandals and legal problems, and it is now trying to convince the markets that it is financially stable. On March 14, the bank said that its auditor had found material weaknesses in its financial reporting controls, which caused its annual report to be delayed. What events led to the recent share slump? A long string of scandals, top management changes, multi-billion-dollar losses, and an uninspiring strategy is to blame for the 167-year-old Swiss lender's current state. Shares of Credit Suisse started to be sold off in 2021 because of losses caused by the collapse of investment funds Archegos and Greensill Capital. Also, Antonio Horta Osorio resigned as chairman in January 2022 for breaking COVID-19 rules, just 8 months after he was hired to fix the failing bank. Ulrich Kohner, the company's new CEO and an expert in reorganizing, released a strategic review in July, but it didn't win over investors. Customers left the bank because of a false rumor that it would fail in the fall. In February, Credit Suisse said that clients had taken out 110 billion Swiss francs in the fourth quarter, while the bank lost 7.29 billion Swiss francs, its biggest annual loss since the financial crisis. In December, Credit Suisse asked investors for 4 billion Swiss francs. On March 15, Saudi National Bank, the bank's biggest backer, told reporters it couldn't give the bank any more money because of regulations. However, it said it was happy with the bank's plan to turn around. The shares have lost 75% of their value in the past year. What steps can Credit Suisse take to calm investors? Credit Suisse said it would borrow up to $54 billion to increase liquidity and investor confidence. But some analysts think that probably won't be enough to calm investors. Another way to boost market confidence might be to get the support of strategic investors. It is backed by investors like the Qatar Investment Authority and the Saudi company Oilan Group. The bank also tried to show that it was confident by buying back around $3.2 billion in debt. The value of the debt had dropped because of the current economic crisis, so the bank was able to buy it back at a discount. The fresh funding and the Swiss National Bank statement that there are no signs or direct risk of contagion for Swiss institutions due to the current turmoil in the US banking market may help bring some stability to the markets. What happens next for Credit Suisse? The help from the Swiss National Bank will give Credit Suisse a much-needed breather at a very difficult time. Last year, the company lost a lot of money, which wiped out all the profits it had made over the previous 10 years. The 167-year-old bank is now trying to start a major restructuring plan at a time when people are losing faith in the financial sector. We are still in the early stages of Credit Suisse's new 3-year recovery plan, which aims to get the company back to its original business of serving the wealthiest clients by cutting 9,000 jobs and shrinking its securitized products business. The concern is that the shockwaves that are ripping through the financial system will make it harder to turn the bank around than it already is. The first thing that needs to be done is to show shareholders that the plan can still work and that the company can survive the turmoil in the industry. Overall, the situation at Credit Suisse has certainly been dire, but it hasn't been all bad news. The company has taken steps to restructure itself and will see some positive results in the future. While this crisis has been difficult, it has also provided the opportunity for Credit Suisse to learn, grow, and improve. With the right strategies, the company can find its way out of this crisis and back to the top. What are your thoughts on Credit Suisse? Let us know in the comments. Also, if you liked the video, hit that like button and subscribe to our channel for more. Thanks a lot for tuning in. See ya later.